Hi guys, Johnny and Mr. Forex Fire. So I'm going to go over the 3 box method, and I'm going to set up a trade and then see if we can get into it. Again, this is recorded sort of live. It's not edited or anything. So I'm going to show you the first process, which is setting up your box 1 and box 2, and then I'll be adding the other video to the end of this if we do get an entry, and obviously any sort of target areas. So I'm just going to share the screen and just make this a little bigger. Right, so we're on the 1 hour. Okay, now on the 30 rule, okay, we just go on to advanced 3 box method. So the preference when right, so what you've got is on your time frame, you're going to multiply it by 60 and then divide it by 30. Okay, so on the 1 hour, I generally use this on the 1 hour and the 4 hour charts. So if we're looking on the 1 hour, we divide it by 60, multiply by 60 times by 30. Okay, so the 1 hour times by 60 minutes in a candle, 60 candles in an hour, and then divided by 30. Obviously it's half, so that's going to be 2-minute entry. On your 4 hour, your 4 hours times by your 60 is 240. That's how many candles it will be, and that divided by your 30 will give you an 8-minute entry. So okay, so that's just to give you an overview on how the 30 rule applies. So when we're looking for the entry, we're going to be looking at this, and we're going to go more in depth on it on the 2-minute chart soon. However, what I want you to pay attention to at the moment, okay? So at the moment, you can see we've had an incline, okay? We've had an uptrend. This is the 1 hour. This is a GBP card. Now, we've come out of that uptrend, and we are now coming down into a downtrend, simply because, again, we have broken structure, and liquidity has been taken a number of times. Okay, liquidity has been taken a number of times. So what I'm looking at the moment, when we zoom in to the bigger picture, okay, I'm looking for a return back up to this area. So I'm quite confident that we can now generate box 1 and box 2. So again, this is just a simple layout of trend lines, and obviously where liquidity has been residing. So I'm just going to get rid of that. So we're just going to fill out box 1 and box 2. So this will be from the ultimate high down to that low area. Okay, so that is a swing point, and I'm just going to have this box 1. Now, when you save anything, you can save it as a template. You draw your thing out, go to save as, and name it whatever it is you want, just so when you come up to name it on the chart, that's, you know, that's your preference. Okay, so when you have your high point, in this instance we've got the high marked out, okay, and now we also have the low point. Okay, so we've got swing high, swing low. That's box 1. Now when you have box 1 laid out, to get the range on what we're working between, you can simply go horizontal rear, horizontal rear. Now this is where we're working in. Forget all of this. Forget all of this. These come into play later on in the trade if we do get an entry, and that'll become in part 2. Okay, but for now, this is what we're working with. We've got a high, we've got a low, we've got a range that is technically on a downtrend. We are now coming back up to take liquidity on these areas here. Okay, so this is where we're heading to take liquidity back. Now I'm anticipating this here, I'm anticipating this area here, which will be known as box 2, to be entered, to be mitigated. Okay, so as we get the price rising back up to take the liquidity of these areas where this one has already been taken, okay, so liquidity has been taken back on the return from there, we then have a price which is currently residing here. We are waiting for a further push up as well to possibly take liquidity from there, because this is where the money resides, okay, and then we are waiting for price to push even further as it takes liquidity from here, and this is the area where we are looking for entries. Okay, where do you enter when we get into these zones? You are simply waiting for a simple maneuver of price, a bit like this, to show. Let's just show you as price is moving. Get the brush, I think might be a better option. So as price is moving like this, okay, and you've got a box up on the top, and this continues to move in and out. Obviously, you've got liquidity. Once you start getting price driving back down and it breaks down through the structure point of the lower areas, this then has formed an order block which nests right inside of the higher order block, if that makes sense. So once you get price starts getting weak and then it drives back down to start to take liquidity on these areas here, okay, we then anticipate a move back up, not into the overall order block area, but it's to where prices come back to return in this area on that lower time frame, okay, on the nesting order block inside the higher order block, okay. So then we would anticipate the move back down. So let's just take a little bit of a deeper look into this. Let's take a look. So as price is going to move back up, okay, we are anticipating this here. We are anticipating this order block here to come into play, okay. It will be the last up before the down. You could technically see it from there, to be fair, but again, we've had a spike up with a wick on here. We've got the range marked out, the low, the high, okay, and I'm going to leave this inside of the video of the 3-box method. We are anticipating price to come up, okay, and as it comes up into this area, this is when we sort of drill down with the rule of 30, 60. The 1 hour times by the 60 is your 60, divided by 30 gives you the 2. You would then drill down to a 2-minute chart by pressing the number 2, hit enter. This brings your chart into a more sort of refined area. And again, as the price moves up on here, let's get rid of this. Do apologize. As the price moves back up into this area, you are then looking for, like I see it on here. Let's get this back on the 1 hour because I want to say this properly. As prices moved back up on the hourly frame, once it enters this zone, which is the higher order block, you are taking your entry or your time frame down to the 2 minute, okay. Once price comes up and it hits into here and it starts to get exhausted, okay, price becomes exhausted inside of the zone, we are anticipating a move back down and having that break of structure. So you're technically having a reversal within that nested area. You're then waiting for the price to come back into play from the first break of structure from its highest area to come back into the order block on the 2 minute time frame, not the 1 hour. It'll be within the 2 minute time frame. So in essence, what you're waiting for is price again to do what it needs to do, okay, come up into play, and it can do this for a bit, and it's when it gets to its highest point and then it starts coming down and it breaks its structure, okay, from that player of the 1 hour, you are then going to break it down to the 2 minutes entry, okay, and then we are looking for that nested order block within that area. The breaker structure has to come within the structure that is held on this higher side, okay? So you've got the 1 hour swing, the 1 hour order block, price to come back up as we've got on here. Price is currently residing here. It's taking liquidity here, waiting for price to come up into the 1 hour order block. Once we get that confirmed, if this was going to be a good trade idea or a good trade entry, okay, you would then start to get a reversal coming back down at some stage from this structure of the 1 hour order block, okay? Once you get this retested on the higher side, you are basically waiting, like I say, for that breaker structure as it comes back down into play. Bring your chart to the 2 minute time frame, and then we would anticipate that to come back up to mitigate into the lower time frame sort of entry within the higher time frame order block, okay? Video's gone on a little bit more than what I sort of intended, but hopefully it's given a few people a bit of a light bulb moment. Again, I will put this into the Discord, and then have this is the before, and then I'll do the video after shot as well if we do get a trade out of this, okay guys? So hopefully that's made a little bit of sense, and then hopefully we can capture this as a trade, and then we would sort of target this as its low side, okay? From there you can technically go for lows, even let these run to liquidity areas which all reside on these pullbacks on the uptrend, okay? But there'll be more on that as the video goes on, okay? See you in the next one. Hi guys, John here, Mr. Forex Fire. So you've possibly seen the first part of what I was setting up on the 3-box strategy, okay? Now it's just come to my attention that we have entered the zone on box number 2, so we can now create box number 3, and I'm going to try and drill into that a little bit more deeper and talk about the pair, which was a GBP card, okay? But when I show you the next screen, it's going to have a little bit of an update on it. So not just having the box 1, which is the swing, the hourly swing, okay, and the box 2, which was the order block, it's going to have a couple of things inside of that box, okay, which I'm looking at the moment. So I'm going to open up the screen, going to share the screen, and I'm going to talk, or try to talk you through a little bit more in depth on what's going on and what I'm looking at the moment. So if you just bear with me for one moment, let's take a look. So we can share the screen, get this opened up, get my handsome face there, right? So what we've got, if I just get rid of this, and I have, let's just say it's going to let me do the alert. So this is where current price was on the last video, okay? I've got these marked up, and you'll see why I've got these marked up in a moment, okay? So that was current price, as you'll possibly see if you rewind this video a little bit, okay? That's the best I can explain that. So as we've got, let's just get the fire wand out, okay? I love to get this out. Fire wand, right? So that's where current price resides. Now, as you can see, we have got our green wick on the low, okay? This is the low, this was the high, this is on the hour, okay? And we've come down, and as we've made the high, the lower low, the lower high, the lower low, the lower high, the lower low, okay? We are waiting for or expecting that little bit of what you would call a trend reversal, a retest, and break it to the higher side, creating a higher high simply because we've taken liquidity out on this side. Okay, so we've taken liquidity out on this side at the moment. Now ignore this at the moment. This is what I've got marked up now as where price stands at the moment, but this is where we were when we first marked up the chart. Okay, so if you just persevere with me for 2 moments, and hopefully things will start slotting into place. Just click the floor forward a few times. So as you can see, this is where price was currently residing, current price, and it's on its way up. We've taken out this liquidity and it's continuing. A little bit of consolidation. It's coming back down. And then it's spiking to the higher side, okay? So now this to here has taken out the liquidity on there, okay? So it's starting, this is sort of telling me that price is now wanting to come back up to mitigate into this area. So this here is the 1 hour order block, okay? This is the 1 hour order block right there, okay? So this was box 1, we drew it out. Box 2 is the order block, and I've included the wick high of this here, okay, because there was a lot of buying power. Although when this candle had closed, the sellers were starting to produce or starting to push the price down. So I incorporated the wick from here to the wick to that candle there as the order block, okay? It just gives you a little bit more sort of maneuverability in the price, okay? So this here was the 1 hour order block. This here is it's the 1 hour time frame, 1 hour TF sort of swing. It's not a 1 hour swing as such that it's made up into 1 hour. Each candle that this is coming down in is an hour in each one, okay? We broke the structure, and this is what I was waiting for. We broke that structure point, okay? So that became our BOS, okay? That became the breaker structure point. We got that. So then we mark it up, come back up into the order block as well. Took out both liquidity from the lower high as price is coming back up to create a higher high, a higher low, a higher high, okay? Hopefully you're following along at the moment. It's rejected as what would be expected from breaking the liquidity on there for a little bit of a retracement. And as it pulls back to run about 50% of that impulse engulfing drive from this higher high, you should start seeing a reverse to continue on the upside, okay? So there we are. We're starting to see a little bit more of a pull, a little bit of consolidation, and then it will start to rise to break the structure of this area, okay? We broke the structure there. That's been a complete clean break of structure as well on the reversal back up to mitigate into this area of the order block, okay? So price is continuing to drive up. So if we just continue with this, and again, just ignore this little blue line at the moment. I'll go a bit more in depth with this at the moment. Now, I got an alarm not long ago saying that we were entering into the order block, okay? Now, this is where the 3-box method comes into play. I was anticipating the order block, a nested area, as we call it. Again, on supply and demand, you can have an order block within an order block. That's what you call a nesting area. And even though each candle's worth an hour, we were starting to mitigate into the contracts of this higher order block, okay? So again, the 1 hour, this is the rule of 30, the 1 hour times by the 60 divided by your 30 gives you the rule of 30. So it's a 2-minute time frame. However, I was trying to enter this on the 3-minute, okay? Now, once you start getting the drive up, okay, once you start getting the drive up, we will be looking at, obviously, weak to strong hands, okay? So we're looking for the sellers to start coming back into power, okay, in essence. So we've got a high, we've got a higher high. We've then got a higher high. Okay. Now, if we drill further into this area here, okay, this is all I'm concentrating on at the moment. We're coming up and we have got the high. Okay, we've got the high. We've got a higher high. Okay, and structurally on the continuation of the move, we've got a higher high. Okay, now each time once we get into here, I'm concentrating on what has been the previous higher low. Okay, we come up this here. Once this here pushed above this, breaking that structure, okay, that then came out of play. Okay, so this is the one that we're concentrating on. We got the pullback here. Okay, we got the pullback here. So this created a high low. So that's the new higher low as we speak. Now, as we had the continuation up into the 1 hour order block of box 2, if this makes sense, if you're following along, we broke structure of this higher high. Okay, so we are going from weak to weak to stronger hands, because this is where we started to sort of peter out on price, and then the sellers were starting to come back into control because price could no longer break any higher than this area at the moment. And as we come down, you can see we actually broke structure. Okay, and this is broken down into the 3 minute rather than the 2 minutes. We broke structure from that higher low. Okay, now the moment that happens, once you are mitigating into your box number 2 and you have done the rule of 30 and you have already mapped out your, in this instance, the continuation on the uptrend, because you've done your high, your higher high, your higher high, and your higher low on the 3 minute. Once you're in the zone and it's starting to do the pullback from the lower time frame, and it's starting to pull back from the rule of 30 time frame, which could be the 2 minute or the 3 minute. You can do 2, 3, or 5 to be fair in this instance from the 1 hour. You wait for that break of structure. This then becomes the interested area of entry. Okay, this here then officially becomes your box number 3. Okay, now that there price should have been just below that. We would have gotten a wick entry, to be fair, because you're going to cushion what you're doing pip wise with your broker as well. Unfortunately, I've got my trade at the moment. If I can get this on, it hasn't quite ended. I've got this set at 72388. Okay, I don't know if you can see that. Let's get rid of that. 72388. You should see that in there, to be fair, on the sell limit. Okay, 72388. Let's see what I have at the moment on here. Unfortunately, as the price did the break downside, that's where I was anticipating price to enter. I have literally been 1 pip from entry. Now, I could have market executed that, but I've just left it as it is. What is promising is at the moment, although we have had, let's take a look, see if we can get this. We've got an A, B, C at the moment. That A, B, C at the moment, this has given me a little bit more confluence that this area here can sort of hold structure, because as we've come down, we've broke structure here. This was giving me my entry point. Okay, as we are now driving up from C, okay, from C, we have broken the initial break of structure point here. You've got A to B, B to the C, which is another impulse drive, has also broken this structure right here. So you've had a breaker structure point from there. We've had a breaker structure point from there. And now we are currently having another breaker structure point on here. Now, if this structure holds, if the high structure holds, we would anticipate the price to sort of come from the higher end to the low, making a lower high, okay, a lower low, and then we would anticipate this move here to bounce off here to then come down and give us the initial big drive down, depending on if this structure right here holds. Okay, now I've given this plenty of cushion. It's a 15 pip. It's a 15 pip stop loss, I do believe. And we go back on the hour. That's what I'm anticipating. And this is a risk to reward of 1 to 10.24. Again, the target, as always, is just that initial 1 hour time frame swing, which is from the high to the low. So we've got everything contained within that. That's what I'm looking at with regards to price movement at the moment. Hopefully we will get that drive back to enter us back in. Should I make this any higher? The order block itself, I just want to check one thing. The order block itself, let's take a look. Just over something else I normally do. The templates. Maybe 50% might be a better option, to be fair. Holding price there. That's still going to give a risk to reward of 1 to 5.55. Reason why I done the 50% there is simply because the initial order block within that 1 hour time frame. But I'm going to risk it and go for the maybe it's the 15 pips to go for the higher reward, to be fair. And again, this is where we are targeting for now. But when you go so far down, you could always do when you get to structure points, okay, you can always say move to break even or take a partial. You do that, let the risk run free. And then what you've got potentially is the move going all the way down to here, okay? Because that is one big drive on the upside. And if we go further in, if I scroll this just down to the bottom of what was the start of the uptrend, there's a 1 to 39.37, which if you let that run free on a small lot size is absolutely fantastic. So to get this panned in. So that's where I'm at the moment, guys. Again, I'm just going to take this down to a 3 minute at the moment. That's where we are at the moment. If I think that's playing out, yeah, it is, yeah. So that's where we are at the moment. We could still possibly get to the drive up on this, if I'm honest with you. It's still heading up towards that, and then we might get the drive down. So I don't want the market to execute this at the moment, because I still have faith that this will come up and tag us in on the 1.72388. Again, this might feel as a trade idea, but these are the things, and this is the parameters that we use within the 3-box method. And what I just want to implore everybody to do is possibly go back and watch this video a bit more, take some notes, okay? Because there is no holy grail when it comes to having the perfect system, but this system with regards to order blocks and timeframes and lowering down your entry and looking for the structure into those areas is going to give you some great confluence onto where to get in on an entry. Okay, it's just a fantastic way to sort of trade. So hopefully you've taken a little bit out of that, and again, I'll have dropped this into the Discord. If you can just give me a thumbs up just to let me know if you've gotten any sort of value out of that. Again, out of the general Discord itself, if you're getting any value whatsoever, you can show a bit more support by donating a little bit towards this Discord channel. There's going to be a lot more to come. Just go to the left-hand side on the screen, click on the donate, and then just drop a little bit for enough for a cup of coffee to keep us going to produce this content. Okay, guys, I'll see you all later.